Hello, I'm audible? Yeah, thank you. Good morning, friends. Good morning once again. Very big round of applause for the audience because to learn is very difficult, it says, and you are here for learning to upgrade your knowledge. So that is why you are the ones who need the biggest round of applause. That is the reason, first of all, you should be applauded. And definitely, it is the heavier side of knowledge. So that is one thing. And at the very outset, I would like to thank the WRC for giving me this opportunity. More particularly, the office bearers of WRC, Ruta Madam, Sanjay Nikam sir, our past chairman Arpit Kabra sir, Murtuza Kachwala sir, and more particularly about the Committee on Charitable Trust in NPOs, which has organized such a fantastic program. And then, before I begin, I would like to talk something about the speakers who will be following me on this particular session today. First of all, at the very outset, Vipin Bataria sir, as I always address in all my lectures, that Vipin Bataria sir is the inspiration to me. He is the person because of whom I am here. So, big round of applause for Vipin Bataria sir. And one more very important factor today. I am very impressed by Kishore Shah sir. He has travelled all the way from Bhavnagar to share his knowledge with us. I met him for the first time today. And Gautam Shah sir, I would like to, I have come to know that he is Dr. Gautam Shah for the first time. In my last session in my WRC, he was sitting in the front row, but unfortunately I couldn't meet him. And today I have come to know that he is Dr. Gautam Shah, and I have come specifically to listen to him on the subject FCI. So with this, coming to my topic today is on amendment amendments in taxation, trust taxation, understanding the amendments related to corpus donations, section 115 BBI, case studies for better understanding. So this is my topic for today. I think I have been allotted 1 hour for this particular topic. So definitely I'll go थोड़ा चलेगा. Good. But I think मैं खत्म कर दूंगा. So that's it. शुरू करते हैं. So this is my syllabus for today. We'll be talking about meaning of corpus, written document necessary. Written document is necessary for, you know, treating a particular donation as a corpus donation. Corpus donation is not a part of income even under section 222 that we'll discuss later. Treatment of corpus donations received by trust registered under section 12AA, 12AB treatment. That is up to assessment year 21-22 and after 21-22. The scenario has changed. Treatment of corpus donation after the amendment, Finance Act 2021, effective assessment year 22-23. Application out of corpus fund. There is a big change in this. Treatment of corpus donations by entities registered under section 12AA, 12AB or approved under section 1023C. Then we'll talk about donations through charity boxes, whether corpus donations can be applied for charitable purposes, corpus donation with specific directions received by the unregistered trust. Interest on corpus donations will also be a part of corpus. There is a case law we will discuss on this. Specific direction can be on identical letters. There's another case law because I have been instructed to talk about certain case laws in support of my what I want to share with you. Donation towards corpus, contribution towards infrastructure fund, voluntary contribution for renovation and repairs of religious institutions, very latest amendment, very recent amendment. Then we'll talk about section 115 BBI. 115 BBI has also been introduced very recently and it talks about the specific violations. So let us come to the very first thing, meaning of corpus. Of course, it is a definition part. The term corpus is not defined in the Act, but it generally refers to an organization's capital. It's a sort of a capital receipt, which everybody is aware of. And many a times when people approach me that हमको सर ट्रस्ट बनाना है, तो ट्रस्ट बनाना है तो उसके क्या क्या बेनिफिट्स है. So a certain few benefits which I tell them is कि first of all आपको आप corpus donation receive कर सकते हैं, capital receipts receive कर सकते हैं. You can save that amount in the specified modes under section 11.5. You can earn income out of it, and then you can run your day-to-day activities out of that money which you have earned. One benefit is that. The other benefit is that you are getting a 15% statutory deduction. You are allowed to debit your capital expenditure also in the income and capital expenditure in the income and expenditure account. You have the possibility of filing form number 9A. You have the possibility of filing form number 10. So there are various benefits when you form a charitable trust. So this is one of them that which we are covering today. It is about corpus. That corpus is a capital receipt, but of course this particular corpus donation in the past was misused on many occasions, many grounds. So that is the reason the department has come up with changes as far as corpus donations are concerned. The usage of that corpus donation is concerned, whether it can be used towards the objects of the trust. If it is used towards the objects of the trust, whether it will be treated as application or not, and if it will be treated as application, what are the conditions to it? These are the changes which we will be talking about today. Then written document is necessary. Now, what do you mean by written document? When we want to classify certain donation as a corpus donation, it can be classified as a corpus donation only when the donor gives a written direction that this is the money which should form part of your corpus fund. If there is no written direction, the trustees of the trust cannot at their own discretion treat that amount as corpus donation. In other words, only when you have a specific direction for that particular amount to be treated as corpus donation, it can be treated as corpus donations. That is one thing. Second thing, do we have a format for it? The Act does not prescribe any format for giving this written direction. So it can be a simple direction saying, this is the money, I want to donate this amount, I am donating this amount to the trust, and this money should form part of the corpus fund. So that is what written document is necessary means. Discretion with the donor. In other words, the discretion for a particular donation to be treated as a corpus donation lies with the donor and not with the donor trust. The donor has the discretion to decide that whether this money should be treated as corpus donation or otherwise. Then format of specific direction, we have discussed that there is no specific format for this. You can just write a simple letter. And one more very important thing, should the direction letter accompany with the donation. It is not necessary that the direction letter should accompany with the donation. The direction letter can be given at a later date, at the time of assessment also, at the time of scrutiny also. So it is not necessary that the direction letter should flow along with the donation. Now let us discuss about a case law. There are various case laws, various contradicting case laws. So I will try to cover these case laws, which will give you a view how the courts are interpreting a particular situation. Because we as practicing chartered accountants will be facing a lot of situations, lot of contradictory situations, whereby we ourselves will get confused to how to treat a particular donation as corpus donation or how to treat a particular application as application from corpus or not. There are various situations. So until unless we don't go through the case laws and we don't have a feeling of the case law or we don't analyze the case laws, we will not be in a position to deal the situation practically. So what is this case law talk about? Printed coupons accepted as written direction. In the case of IT Overseas Diamond Jubilee Trust, the SEC had received donations by way of sale of coupons for specific purposes, which it claimed to be donation towards corpus fund. It was held that the fact that donation coupons clearly expressed purpose for which money was being donated clarifying that money was towards corpus fund and was to be earmarked for specific purpose for which it was being given. Showed showed that donors had applied their mind showed that donors had applied their mind and had chosen to give donations for specific purpose. It was further held that it could be reasonably inferred that donors had purchased specific coupons as per their willingness to give donations to corpus fund to be earmarked for specific purpose, and these donations were rightly treated as donations towards corpus fund. So this is the situation whereby printed coupons are issued. Then we talk about corpus donation is not a part of income even under amended section 224 2A. Corpus donation received by trust not registered under section 12A cannot be put to tax. There is one situation which we have been discussing. We earlier nowadays, so like 12A, getting 12A has become easier. If you have not started with your activities, you can get a provisional registration, and if you have started with your activities, you can go for a regular registration for a period of 5 years. But earlier the situation was not so. Even now, I have a couple of clients whereby they are not registered under section 12A. So for them, this particular case law can be made applicable, that even if the trust is not registered under section 12A and you are receiving certain donations as corpus, that can be treated as exempt under by saying that this is corpus donation even if the trust is not registered under section 12. Now I have cited certain case laws for this. The Mumbai bench of the and I have given relatively newer case laws. I have not taken the older case laws because most of the cases are becoming more and more irrelevant in the current situation after the amendments. So that is why I have chosen relatively newer case laws. Mumbai bench of the ITIT in the case of Chandraprabhu Jain Shwetambar Mandir versus Assistant CIT 2017, not very late. But in this particular case, it was decided that even if the trust is not registered under Section 12A, and if you have received corpus donation, it will not be treated as income, and therefore it will not be taxed. Then we have a case of Serum Institute of India Research Foundation ITIT Pune, decided in the year 2018. Same situation. In the case of Financial Inclusion Trust, decided in 2023, it was held that corpus specific voluntary contribution being in nature of capital receipt was outside scope of income under section 224 2A and hence could not be brought to tax in case of trust not registered under section 12A or 12AA. Now 12AB. In other words, receipt can only be taxed if it can be characterized as income. So again, certain case laws out here, a very old case law, but of course it holds very right even now, that receipt can only be taxed if it can be characterized as income. Can corpus donation be treated as a part of income under section 224 2A? Now, this is something very contradictory or very confusing nowadays. According to me, and the learned speakers will also vouch to it, that you need certain amendments in 224 2A also. According to me, one amendment is required for 11.5 also. I will cover that in my later slides. Now, a question mark is raised on the scheme of income tax under which a corpus donation is first treated as income under section 224 2A and then exempted under section 11(1)(d) and section 12 of the Act. This issue is yet to be resolved as the computation of income under the prevailing provisions is being made treating corpus as income under section 224 2A and subsequently exemptions are allowed. Now, what does this mean? If you are receiving a corpus donation, first of all, you are offering that amount for taxation under section 224 2A and then you are claiming a deduction under section 11(1)(d). Simultaneously, 12(1) also says, 12(1) says that any voluntary contribution other than corpus, other than money received with a specific direction, that it should form part of the corpus, will be added to the income. Otherwise, corpus donation will not be included. That is what it means. Meaning of income under section 224 2A. Now, what does 224 2A say? Income includes voluntary contributions received by a trust created wholly or partly for charitable or religious purposes, or by an institution established wholly or partly for such purposes, or by an association or institution referred to in clause 21 or clause 23. Because why I am saying that 224 2A also needs certain amendments, because here 224 2A is talking about wholly and partly charitable trusts or religious or charitable trusts. But nowadays, as far as 11.1 is concerned and 12.1 is concerned, they are talking specifically wholly charitable trust, about wholly charitable trust. They are not saying partly. They are saying wholly meant for charitable purposes. So that is why I am saying that certain, 224 2A needs a relook. Treatment of corpus donation received by a trust received under section 12AA 12AB before amendment by Finance Act 2021, that is up to the assessment year 2021-22. Now what was the situation till that time? According to section 11(1)(d), any voluntary contribution received by a trust or an institution created wholly for charitable or religious purposes with a specified direction that they shall form part of the corpus of the trust or institution shall not be included in the total income. Section 11(1)(d) was introduced with effect from 1/4/1989, and simultaneously Section 224 2A, which defines the term income, was amended and corpus donations were included within the ambit of the taxable income on which a charitable organization can claim exemption. As far as the exemption of corpus donation is concerned, it was available even prior to 1/4/1989. But with this amendment, corpus donation, which was not a part of the taxable income, has now been considered under the part of the taxable income, and then the deduction under section 11(1)(d) has to be claimed. Now, what is the challenge which can arise from this? Suppose if you are including the corpus donation under section 224 2A, and by the play of section 13, if by any chance the exemption is lost of a particular trust, in that case, it will be tantamounting to taxation of corpus donation also, which is against various judicial pronouncements which are saying that corpus donation is the capital receipt and it should not be put to tax as general income. Treatment of corpus donations received by section 1023C approved institutions up to 2021-22. Now, until assessment year 2021-22, the corpus was not defined for section 1023C organizations. That is what is mentioned out here. If institution registered under section 12AA receive any income in the form of voluntary contribution with a specific direction that they shall form part of the corpus or a trust or institution, they shall not be included. However, no such specific exemption was given to 1023C registered organizations. So, as a result of which, 1023C approved organizations were bound to apply that particular corpus amount also towards the objects of the trust. Now, later, after 21-22, due to the amendments, this has been taken care of. Now, for 1023C organizations also, they can enjoy the benefits of corpus donation, which was earlier not there. Because earlier, uh, I think you must have studied that 1023C and Section 11 entities, though both were charitable organizations, they were on a totally different footing and tangent. Many many provisions which were there for Section 11 entities, they were not there for 1023C entities. So, wide amendment 1023C and Section 11 entities have been brought more or less at par. So now corpus donation 1023C also, benefit of corpus donation will be given with the amendment after assessment year 21-22, that is effective assessment year 22-23. So the conclusion is this amendment brings exemption available to institutions approved under section 1023C for the corpus donations at par with the exemption available to trusts or institutions registered under section 12A, 12AA, 12AB. Now, after effective assessment year 22-23, there have been various changes now. As far as corpus donation is concerned, the application of corpus donation is concerned, the reimbursement of corpus donation is concerned, and the timelines within which the amount has to be reimbursed or invested to modes specified under section 11.5. Under the existing provisions of Income Tax Act, corpus donations received by trust institution funds are exempt from tax without any requirement for applying them for charitable purposes or investing. This exemption pertaining to corpus donation is available to organizations approved under Section 1023C as well as 12AA. The Finance Act 2021 has introduced amendments under Section 11(1)(d) as well as the third proviso to Section 1023C. After this amendment, the corpus donation shall be exempt only if the amount is invested or deposited in its specified modes as per Section 11(5) of the Income Tax Act 1961. Earlier, this provision was not there. Now, it is a very strict provision. It has been brought into 115 taxation under Section 115 BBI also. You have to invest the corpus amount in the mode specified under Section 11(5). If there is a shortfall, the shortfall will be put to tax under Section 115 BBI. Now, 11(5) investment modes. What does it say? The condition of investing the corpus fund in Section 11(5) investment shall apply only to that part of the corpus fund which has been created for corpus donations exempted under Section 11(1)(d) because organizations may have corpus funds invested in business assets under Section 11(4) or 4A which do not conform to the requirements of Section 11(5). Now, what does this say? When we are talking about 11(5), 11(5) may it reads that amount accumulated under Section 11(2) has to be invested in the mode specified in Section 11(5). But at the same time, 11(1)(d), when we go to 11(1)(d), there is a specific condition that whatever amount we are receiving as corpus donation has to be invested as per the mode specified in Section 11(5). So these are the two possibilities which have been covered as per the Act. So Section 11(5) maybe the last amendment was done way back, I believe in 1983-84. So 11(5) also there should be a small amendment saying that 11(1)(d) should also be covered in the section which is not covered. And 1023C also we have to make a mention of 1023C also in Section 11(5). Because 11(5) ka section at the moment is not talking about 1023C organizations. Now, because there are various possibilities of creating a corpus. Now, for example, 15% statutory deduction, which is accumulated over the period. Has that to be invested as per in the mode specified in Section 11(5)? No. There are various other possibilities. Suppose if you are paying taxes under Section 115 for corpus donation, 11(7). So that is another possibility. So all those things are not required to be invested as per the mode specified in Section 11(5). But of course, there I would like to put one more thought in that. Generally, when you are not investing in the mode specified in Section 11(5), that amount lies in your bank account. Again, 11(5) covers the amount lying with the scheduled bank also. So we are more or less complying with it. So that is not a challenge. Now, there is one more scenario which I would like to discuss. Donation for construction of building. Earlier, what used to happen? Corpus may suppose we have an amount of 1 crore. And that 1 crore is say invested in say FDs. We have purchased FDs of 50 lakhs. And we have purchased a capital asset, immovable property of say 50 lakhs. So earlier this bifurcation was not required. Nobody was bothered about it. We were just saying that this is the corpus donation and these are the investments in our asset side. But nowadays, when in the return, we have to specifically state that this is the corpus which you are having and this is the investment that you have done in the mode specified under Section 11(5). At that particular time, there comes a challenge that how to reflect that amount of 50 lakhs which is invested in the immovable property. So generally what we say is that this 50 lakhs ka immovable property is already we have applied. So when we are filing the returns, of course, sir will cover ITR 7. But then too, when we are filing the return, we can always say that we can always talk about the 50 lakhs, which is invested in the mode specified under Section 11(5). And also, immovable property is also covered under Section 11(5). So that is not a challenge basically. So, but the presentation, the ways of presentations have changed with the advent of the new forms and the new audit reports. Investing surplus fund or corpus donation in immovable property. I think we have covered this. Now there is a technical flaw of not amending section 12.1. Now what does let us go through it in detail. As per section 12.1, any voluntary contribution not being towards corpus donation shall be deemed to be the income derived from trust property held for charitable and religious purposes. This is an explanation to section 11.1. It may be noted that under the existing law as well as the proposed law, there are two sections where corpus donation can be claimed as exempt. One possibility is the first option is to treat corpus donation as income under section 11.1 and then again treat it as an application under section 11.1d. Second thing is the second option is to directly treat corpus donation as exempt under section 12.1 because 12.1 specifically says that other than money received in the form of corpus donation with a specific direction. So these are the two possibilities where you get deduction for corpus donation. There should have been a corresponding amendment in section 12.1 also. Otherwise, organizations will not include corpus donation in the income at all by applying section 12.1, which will negate the very purpose of these amendments. So because if we talk about 12.1, 12.1 straightly says that except corpus donation, except money received in the specific direction. That means only the general donation part, the voluntary contribution part, to be applied towards the objects of the trust has to be treated as income. Now, after assessment year 21-22, that is from assessment year 22-23, there have been a lot of changes as far as corpus donations are concerned. What are those changes? That earlier you were allowed to apply the amount falling under the corpus fund towards the objects of the trust. Even now you are allowed. But the only thing is the changes which have been made now are you that amount which you have spent from the corpus towards the objects of the trust cannot be treated as application towards the objects of the trust in the year in which you are spending that amount. It will be treated as application towards the objects of the trust when you compensate that amount. Compensate in the sense if you deposit that amount back to the mode specified under section 11.5, that is the time it will be treated as application towards the objects of the trust. When this amendment came in, there was no time limit prescribed to it. Later the department realized ये तो फिर मिसयूज होगा. कैसे मिसयूज होगा? आपने कॉर्पस में से पैसा यूज कर लिया, अब आप उसको कॉम्पनसेट ही नहीं करेंगे फॉर ईयर्स टू कम, 10 साल, 20 साल, 25 साल, 30 साल, तो अमेंडमेंट का मतलब खत्म हो जाता है. दैट इज वाई दे केम अप विद अ टाइम रेस्ट्रिक्शन ऑफ 5 years. अब वो 5 years का रेस्ट्रिक्शन कितना सही है कितना गलत है, दैट इज अनदर पॉइंट ऑफ डिस्कशन. नाउ there is one more possibility to it. Suppose in the earlier regime, before the amendment, आपने कोई पैसा, you used the money from the corpus, you applied it towards the objects of the trust, you claimed it as an application towards the objects of the trust. Now suppose if you are compensating that money back to the corpus vis-a-vis mode specified under section 11.5, it will not be treated as application towards the objects of the trust, and very rightly so because you have already claimed a deduction in the earlier year before the amendment. So this we have to be very careful. The double deduction will not be allowed. I have given an example also out here, practical example. Restriction on application out of corpus. The Finance Act 2023 inserted the second, third, fourth proviso to explanation 4.1 to section 11.1 with effect from 1/4/23 and will accordingly apply to the assessment year 23-24 and subsequent assessment years. Conditions to be satisfied while making an application out of corpus. The conditions to be satisfied for making an application from corpus for charitable or religious purposes were not previously mandated. These conditions are now mandated. What are those conditions? The Finance Act 2023 inserted a second proviso to explanation 4.1 to section 11.1, stating that if an application from the corpus does not meet the specified conditions, depositing the amount back into the corpus will not be treated as an application. Now, what are the possibilities? I think it is in the next slide. The restoration of the corpus shall be subject to the following specified conditions. One such condition is such application should not be in the form of corpus donation to another trust. Then TDS is, if applicable, should be deducted on such application. Now, what does this mean? That suppose if you are using the money from the corpus towards the objects of the trust, towards the objects of the trust, and that particular usage was a TDS was supposed to be deducted on that particular usage, and if you have not deducted TDS on the same, in that case, compensating the money back to the corpus vis-a-vis section 11.5 will not be treated as application towards the objects of the trust because you have not met the conditions of application when the amount was actually spent. What is the third possibility? Where payment or aggregate of payments made to a person in a day exceeds rupees 10,000 in other than specified modes is not allowed. Third possibility. Fourth, carry forward and set off of excess application is not allowed. Fifth, application is allowed in the year in which it is actually paid. The application should not directly or indirectly benefit any person referred to in section 13.1. Now, what does this mean? Suppose if you are applying the money from the corpus fund and that money gives benefit to the specified person, in that case, it is not meeting the condition. If you compensate that amount again, it will not be allowed as application towards the objects of the trust. The application should be in India except with the approval of board in accordance with the provision of section 11.1c. Now, this 11.1c ka thing we are facing, let me discuss this issue with you. That we are facing certain issues as far as the charity commissioner's office is concerned. Suppose if you are going to a charity commissioner for registration of a trust and you are saying that I will be applying money towards the objects of the trust outside India, there is a possibility that the charity commissioner's office may deny registration or they may want to amend that clause. But the challenge comes when we want to spend that money. The trust is formed today, it may run up to hundreds of years. At one fine morning, if you want to spend the money towards the objects of the trust on objects which are outside India or on activities which are outside India, what to do? You don't have that provision in that particular constitutional document. So that is why when you are aware that 11.1c allows you to spend on approved projects which are outside India, you can tell them कि sir आप 11.1c देखिए हमको allowed है to spend the money towards the objects of the trust provided it is approved by the central government or the CBDT. So you allow us to put this clause in our constitutional document because कल हमको किसी object पे outside India खर्चा करना पड़ा. We will have to again come to you, get the trust deed amended. At that time also you may not amend the trust. So if we are aware of the provisions of the law, we can tell them. We can deliberate on this particular issue with the officials. Cap of 5 years to restore the corpus. I think we have discussed this. Within 5 साल के अंदर अंदर आपको restore करनी है. Application out of corpus before 1/4/21 should not be allowed as an application because we have already claimed it as an application in the earlier year. Treatment of corpus donations by entities registered under section 12AA, 12AB or approved under section 1023C. Corpus donation given by a section 12AA, 12AB registered trust to a section 12AA, 12AB registered trust as well as to a section 1023C approved institution. Both the scenario. When you make a donation from 1023C entities to section 11 entities and vice versa, section 11 entities to section 1023C entities will not be treated as application of income. This was amended earlier. That when you are making a corpus donation from one trust to another trust or from one institution to another institution, in that case, it will not be allowed as application towards the objects of the trust. Inter-charity donations. Inter-charity donations, there have been amendment now. Now, what is that amendment? If you are giving a donation of say 100 rupees to another trust, in that case, you will be allowed an application of only 85 rupees. 15 rupees will be disallowed. Because earlier, why this amendment has been brought? That earlier there was round tripping of funds. There was a chain of, say, example, five or six trusts. One trust donate eight trusts donating to B, B to C, C to D, and 15% is accumulated on each and every instance. In that case, the money is simply accumulated. You don't spend towards the objects of the trust. So the whole purpose of forming a charitable trust is nullified. That is the reason this amendment has been brought into. But there are some inbuilt challenges also in this particular setup, because let me take a practical example again, that if you are donating to a particular educational institute, suppose you are sponsoring education of say 10 students, definitely you are not going to pay individual amounts to the students. You will pay directly to the charitable trust which is running the educational institution. In that case, what will be the scene? In your books, whether you will classify that amount as promotion of education, or whether you will classify that amount as donation to another trust. In my opinion, if you have genuinely donated towards the education of the students, you should classify that amount as promotion of education, and you will be allowed 100% of the amount donated. Donations through charity boxes. Now, this judgment I came very recently, very interesting judgment. I will like to read this particular judgment. In the case of Shri Mahadevi Tirath Sharda Ma Seva Sangh versus ITO 2010, it was held that donation collected by SSC Society, which was managing a temple, in a donation box kept in temple premises, with appeal that donations collected would be spent for building construction, could be understood as carrying a specific direction that they would be utilized for construction of building, and therefore same would be treated as forming part of corpus of SSC and would not constitute income for purpose of section 11 and 12. It was observed that the manner in which such donations had been collected by the SSC was not disputed by the assessing officer. The only dispute was that the SSC could not provide the names and addresses of individual donors who have contributed towards building construction fund. Now, according to what we have learned till now, that for a donation to be classified as a corpus donation, donor का नाम और एड्रेस इज अ मस्ट. नाउ दिस पर्टिकुलर जजमेंट बिल्कुल विपरीत है उसका. व्हाट दे से इज names and address of individual donors who have contributed toward building contribution construction fund. Quite clearly, the donations were being collected from the devotees at large, and the insistence of assessing officer of production of individual names and addresses was not justified. This is totally against or opposite of what we have learned till now. कि भाई यहाँ आपको नाम एड्रेस देने की जरूरत नहीं है. The assessing officer is not justified in asking for the names and addresses of people donating towards the corpus fund or building construction. Moreover, the bona fides of such practice being carried out by the SSC either in the past or during the year under consideration was not doubted. Therefore, the impugned amount contributed voluntarily by the donors could be understood as carrying a specific direction that it would be utilized for construction of building, and therefore the same was liable to be treated as forming part of the corpus of the SSC, and resultantly such amount would not constitute income for the purposes of section 11 and 12. Now that is why I am saying that each and every situation is different. कोर्ट किस करवट बैठेगा at times you don't know. We have got a certain perception in our head, but when we go to the appellate authorities, something new might come up. And this is one such example. Now we have a contradictory case also. The court held that donations received through a charity box cannot be considered as corpus donations, even if the box is marked with word corpus. In the case of Sri Digambar Jain Naya Mandir versus Assistant DIT, it was determined that an ordinary devotee could not distinguish between the corpus and non-corpus funds. A corpus donation is a special type of donation that requires specific direction, and a mere inscription on the donation box is not sufficient to establish specific direction. It is not possible to convert capital into income received in the name of corpus. The same issue was debated in Prabodhan Prakashan versus Assistant DIT, and the plea of the SEC was rejected. So these are two types of judgments, contradictory judgments. But of course, when such situations come up, we have to deal with it on a case to case basis and we have to go ahead. In summary, for all practical purposes, a specific written direction would be necessary, even though there may be some debate over the absolute requirement of such direction. Whether corpus donations can be applied for charitable purposes. It is worth noting that Income Tax Act does not prohibit the use of corpus donation for charitable purposes. However, after the amendment by the Finance Act 2021, the application of corpus donation for charitable religious purpose in the year of application will not be considered as a valid application. I think we have already discussed this. Corpus donation with specific direction received by unregistered trust. Again, these two judgments. Now, what are these judgments? Bank of India retired employees medical assistance trust versus income tax officer exemptions. Then we have ITAT Mumbai Bench D in the case of Chandra Prabhu Jain Shwetambar Mandir versus Assistant Commissioner of Income Tax. I think this case laws we have discussed in the past. We have a contradictory ruling in this also. This contradictory ruling of ITAT Patna, they say that it will be taxable if the trust is not registered, and in my view also, if the trust is not registered, when you are not registered under Section 12A, the provisions of Section 11 and 12 are not applicable to you. But anyways, this particular judgment has been given on a totally different tangent. The honorable courts must have treated this particular donation as a capital receipt, and that is why they are saying that this will not be taxed. Interest on corpus donation will also be, there is one judgment which says that suppose if there is a direction from the donor and they say that this particular amount should form part of the corpus, it has to be, obviously it has to be invested in the mode specified under section 11.5, and the donor further goes further to say that the interest or the income accrued on this should also form part of the corpus. So specific direction can be on identical letters. बहुत बार ये सवाल उठता है कि सर 100 लोगों ने कॉर्पस डोनेशन दिया है, आपने फॉर्मेट दे दिया, हम सबका 100 लेटर एक जैसा बना देगा. सो इट सेज कि भाई कोई दिक्कत नहीं है, इफ यू हैव आइडेंटिकल लेटर्स ऑफ कॉर्पस डायरेक्शन इट शुड नॉट बी अ प्रॉब्लम. One more case law, contribution by parents to SSC trust towards different corpus funds which were to be utilized for furtherance of object of the trust are exempted under section 12. Infrastructure fund exempted. Recent amendment 1023C5 Ram Janam Bhumi. I think from 1/4/2021 this amendment was brought with retrospective effect. Earlier this amendment was not there, but we will see many such implications in future. The amendment was brought in 22 with retrospective effect from 1/4/2021, saying that notified temples and other places of worship, Gurudwara, mosque, church, these notified places, if they are getting donations, this is the only exception where a donee trust can treat the amount received as corpus donation. This is the only exception in the Act. Coming to section 115 BBI, yes, sir. Running next to amendment for the corpus fee tested in level 5. What will happen to the old portion? Many trusts have not invested as funds in level 5 for certain reasons like income tax paid or in furniture. So, what if the old corpus is not taxed properly? They will be put to tax, so the difference will be taxed. The old corpus. The amendment is new one. Maybe it is a old corpus, but according to me, I have been dealing with many trusts whereby there is a old corpus, because earlier it was not required to be mapped on a one-to-one basis, but now that requirement is there, and we have seen that wherever there is a mismatch of section 11.5, the balance is put to tax. Yeah. Hmm. I would suggest that it will the use of the money, that totally, if you are using that money on a day-to-day basis, you are receiving the live membership basis fees on a continuous basis. No, in that case, I would not suggest that it should be put to corpus. The usage has to be seen, of course. Now, if you feel that कि भाई हाँ, this live membership has been received, and हम straight away उसको FD में invest कर देंगे, and the income from that particular investment will be used towards the objects of the trust. In that case, definitely I would classify that particular amount as corpus. No, in that case, corpus for anything to be treated as corpus, according to me, the direction letter has to be there. The direction letter has to be there. First of all, the trust has to decide that how is that money put to use? How will they use that money which they are receiving as like members? Sir. हाँ, हाँ. If it is not invested to the extent of 85% or applied to the extent of 85%. What you are trying to say is if you have a fixed deposit with you, you are earning interest on the same. That interest has to be first of all classified as income in your income and expenditure account, and 85% of that amount has to be put to use. If there is a shortfall in the use of 85%, that shortfall will be put to tax, subject to filing form number 9A and form number 10. Yeah, that I discussed about the case law, but provided you should have a specific direction from the donor saying that this particular amount, the interest accrued or the income accrued on this particular corpus donation should, I mean, that income will also be added to the corpus. If there is a direction for that particular purpose, you can jolly good add to it. Sir, माइक दीजिए ना. In the balance sheet which we are showing, should we break the investments clearly to show corpus investments to match the corpus? Exactly, we should do that. Always. Yes, we should do that. That is always advisable to avoid confusion. But if they are historical, we can just do that breakup and keep it. Do we have to earmark? See, generally, now if it is difficult to, I can understand your issue. That suppose if you have a corpus of say 10 crores, and you have other funds also, earmarked funds also, and you have made a fixed deposit of say 11 crores. Now, how do you break that? That is your question, I believe. Yes. So in that case, when we are filing the return, we can always say that I mean investment on a higher side is allowed. Investment on the lower side is not allowed. When there is a shortfall of investment in the mode specified under section 11.5, that is the time you will be put to tax. Okay, thanks. Sir. There are any minimum or maximum criteria for corpus fund as compared to the regular income of the trust? I can't. Amount wise. वैसे और एक सवाल. Yeah. Is there any minimum or maximum amount criteria for the trust as compared to the regular income? And is there any minimum or maximum amount for donor also while giving the donation for? No, no. There is no such minimum maximum criteria. Okay. But if the income of the trust and the ratio income of the trust and corpus fund, it can be anything. Yes. Minimum maximum is not prescribed. जितनी आपकी श्रद्धा हो उतना दे सकते हो आप. Yes. हाँ. हाँ. हम्म. 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 Yes. Yes. Right. See. Yes. 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 इन्वेस्टमेंट सेक्शन में दिखाना पड़ेगा. यस, इन्वेस्टमेंट में दिखाएंगे हम सारा. दैट इज व्हाट आई डू. यस सर. Hmm. Now that has to be seen on a case-to-case basis. I should have the figures only then I can tell you. On a one-to-one matching will be difficult because until unless I don't have the figures. No, but value will be depreciated, I agree. But value, the depreciation you have already claimed in your income and expenditure account. You have already claimed in your income and expenditure. Ideally, lot of the trust will do, they will debit the entire amount to the income and expenditure account. Or whenever you are constructing a building, you have got two options. Either you debit the entire amount to the income and expenditure account, one thing. And the other thing is ki you claim depreciation on the same. Earlier, both. But then after 11.7, 11.6 or 11.6, I believe, then both the things are not allowed. But of course, for your query, we'll have to see the practical figures. Only then we can. But I would say that 50 lakhs, when you're talking about getting donation of 50 lakhs corpus fund and investing that entire amount into the building, I will straight away say that it is applied. I don't have any corpus in that case. Okay, okay. Because that criteria has come off late. Because earlier we were not allowed to, we were not required to justify. But now when we have to justify, we will always say that this particular corpus which we have received, that was already invested or that was already used for construction of the building. But then when in such a case, we will always say that that amount is entirely applied. And suppose in scrutiny, if the department asks, then we can say that कि भाई ये value कम इसके लिए हुआ है because it is depreciated over a period of time. That we can always say. हाँ sir. हाँ okay okay. Sorry, question answers last में we have got 40-45 मिनट का समय. By the time I'll. तो लास्ट में ले लेंगे. Please write down your queries and then हमारे पास we have got a panel of experts on the subject, so we can handle it on one-to-one basis. Okay, so one because मेरे पास कम समय है अभी. Section 115 BBI. Now, what is the sole idea of 115 BBI? Because earlier all the violations in the trust provisions of the trust, जहाँ पे भी violations है, all those violations were scattered. They were scattered. They were in the specific section. कि भाई हाँ ये नहीं किया तो ये लगेगा, ये नहीं किया तो वो लगेगा. Now what they have done is कि they have come up with a separate section 115 BBI, and 115 BBI they have covered all the instances where there is a violation of the law, and all those violations will be put to tax at the maximum marginal rate of 30%. So this is the crux of 115 BBI. Now let us come to the individual situations. What all are covered in 115 BBI? The number one is income applied outside India in violation of section 11(1)(c). If there is no violation, it is fine. Then income under section 11(1)(b). What is 11(1)(b)? When you are filing form number mahine for deemed application. Then income under section 11(3). What is 11(3)? 11(2) mein you are allowed to accumulate for a period not more than 5 years. Now 11(3) is when you violate the conditions of accumulation for a period of 5 years. So that is again covered by 115 BBI and the income will be put to tax at MMR. Then we have the fourth one, value of any medical or educational services provided to interested persons covered by section 12(2). Now, this is more or less spending money for the benefit of specified persons. Then we have violation of conditions specified under section 12(a)(1), non-filing of income tax return, non-obtaining and furnishing of audit report, non-maintenance of books of accounts, non-applying for renewal of registration or for making the provisional registration into a normal registration. Now this is also covered in specified violations. Suppose आपने provisional ले लिया, provisional के बाद आपने regular नहीं किया, so that is also a violation. Not applying for re-registration for confirming the modification of object clause. Then violation of section 13(1), income applied for private religious purpose, income applied for particular religious community, benefit to interested person, investment of funds in unspecified manner. Violation under section 11(1)(d). Unspecified manners means other than mode specified in section 11(5). Incidental business activity in excess of 20% of gross receipt 13(8) and proviso to section 215. Anonymous donation in excess of exemption limit, which is 5% under section 13(7). These are the situations where you will be put to tax at maximum marginal rate. Tax regime for trust before the introduction of section 115 BBI. I have already given the introduction saying earlier all the violations were scattered. Now they have been brought under one roof. And the best thing or whatever, it will supersede the other sections. Now, for example, we had 164.2, we have 164.23 read with section 167B. 115 will supersede all those sections. To whom 115 BBI is applicable? 1023C organization, section 11 organizations. Types of income taxable under section 115 BBI. Now, one by one we'll cover all the situations. Income accumulated or set apart in excess of 15%. Now, a very interesting situation had arose in this particular violation. Yes, earlier there was no clarity. What was happening is, suppose you got a statutory deduction of 15%. At 15% ke baad, there is some shortfall in the application towards the objects of the trust. Now, earlier, because there was no clarity, a lot of SSCs paid 30% tax on the excess of 15%. Whereas, I was of the opinion at that time also that the trust should be put to tax on the rates applicable to individuals. This thing has to be clarified. Then came a clarification. Now, after the 15% statutory deduction also, you will get a deduction of 2,50,000 which is available to the individuals. That is one scenario. And that scenario will prevail when you pay the taxes directly. But if you accumulate over and above the 15%, and that accumulation is not as per the provisions of the law, in that circumstance, that excess accumulation of over and above 15% will be put to tax at maximum marginal rate. So this is what it means. Deemed income referred to in explanation 4 to 3rd proviso to clause 1023C of section 10 or subsection 1B of subsection 3 of section 11. Now this is when you are accumulating your funds for a period not exceeding 5 years. There are various conditions given to be complied with. I am not going into detail into the conditions. If you violate those conditions, say for example at the end of the 5th year you are not in a position to use that amount towards the objects for which you had earmarked the funds, then in that case that particular amount will be to tax at maximum marginal rate. Any income which is not exempt under section 23C of section 10 on account of violation of provisions of clause B of 3rd proviso of clause 23C of section 10 are not to be excluded from the total income under the provisions of clause D of subsection 1 of section 13. Now, what is 13(1)(d)? 13(1)(d) says that such investment will not be excluded while computing the total income of trust and shall be taxed at maximum marginal rate. Now, earlier there were case laws which said that if you are violating the section 11(5), in that case, the income which is accrued from that particular investment will be put to tax at the maximum marginal rate. Now, with the advent of 115 BBI, if you are violating section 11(5), that amount of violation itself will be put to tax at 30% maximum. So that is the difference in the situation now. Any income which is deemed to be income under the 21st proviso to clause 23C of section 10 or which is not excluded from the total income under clause C of subsection 1 of 13, the subsection 1 of section 13. Now this is 13(1)(c). When you are spending the money towards the objects of the trust, maybe towards the objects of the trust or not, but for the benefit of the specified person under section 13(1)(c), in that case you will be put to tax at maximum marginal rate of 30%. And one more penalty section has been introduced. In addition to this, part of the income shall also be subject to penalty under newly inserted section 271AA. Now, what is that penalty? 100% on the first violation. Now, suppose if you are spending 1 lakh rupees for the benefit of the specified person, you can be levied with a penalty of 1 lakh rupees. And that is on the first violation. On the second violation, you will be levied with a penalty of 200%. And 3, 4, 5 अभी तक आना बाकी है. So that is the scenario. It is money. मतलब they are very strict against the money being used for the benefits of the trust specified persons. Any income which is not excluded from the total income under any income which is not excluded from the total income under clause C of subsection 1 of section 11. Now 11(1)(c) says that when you are spending the money towards the objects outside India, in that case those particular objects or those particular programs should be approved by the central government or should be notified by the Central Board of Direct Taxes. Now, how 115 BBI will be brought into play? First of all, tax will be levied on the amount calculated at the rate of 30% on the aggregate of specified income, and then the amount of income tax the SSE would have been chargeable had the total income of SSE would have been reduced by the aggregate of specified income referred to above. Suppose you are having a total income of say 50 lakhs including the specified income, उसमें 10 lakhs is specified income, 10 lakh पे you will be put to tax at maximum marginal rate और बाकी के 40 लाख के ऊपर as per the other provisions of the law. This we have already discussed, I believe, because earlier many trusts which were not required to be audited, 2,50,000 से कम का volume था, they were not required to be audited in the last year. I am talking about financial year 23-24. तब तक clarity नहीं आई थी. Clarity came in October 2023. So till that time, the trust को क्या करना पड़ा कि suppose उनकी income 2 lakhs है, अब वो 2 lakhs के सामने उन्होंने खर्चा समझो 1 lakh ही किया. Otherwise, that 2 lakh, entire 2 lakh was exempt from tax because it is less than 2 lakh. But लेकिन clarity नहीं होने की वजह से 2 लाख पे लाख खर्चा किया तो 1 लाख पे 30% टैक्स भरना आ गया या 15% निकाल दो. Yes, sir. Yes, system was also taxing, and then there was a change in the system also. The particular notification was also specifically saying कि भाई यहाँ हमने changes किया है, and now you will be allowed 2,50,000 which is available to the individuals. Now I have taken a practical example out here. Total receipt 2 lakhs, amounts set apart 30,000, amount required to be spent 1,70,000, spent 1,40,000, shortfall 30,000, 30,000 पे टैक्स भर दो. Later on, जिन लोगों ने ऐसे टैक्स भर दिया, they had to revise their returns so that they could claim the refund. अब refund भी बहुत लोगों का नहीं आया. So now 10B or 10BB, maybe simultaneously changes were done as far as section 115 BBI is concerned. So I've just taken a screenshot of a particular section where you have to fill in the details related to your specified income in form number 10B and 10BB as the case may be, whatever is applicable to you. तो यहाँ पे in detail they have asked. सब कुछ डिटेल में भरना है, जो जो चीजें मैंने कवर की है, एवरीथिंग हैज टू बी रिटन इन डिटेल एंड देन यू कम आउट विद अ टोटल इनकम अंडर दिस अंडर सेक्शन 115 BBI and tax will be calculated accordingly. Earlier we have to mention the gross income, then the specified income, then specified income पे 30% tax, and then finally the remaining pay as per the normal provisions of the law. Of course, sir, ITR 7 cover करेंगे तो he will throw more light on this. 10B, 10BB. So I think I have come to an end to my timely हो गया एकदम exact time. Okay. So I think this is the end of the syllabus for today because 115 BB I have covered. Corpus donation I have covered as far as possible. Elaborate way में कर लिया है. अभी तक कॉर्पस पे इतना बात कभी भी नहीं किया किसी भी सेशन में किसी भी सेमिनार में. बट ऑफ कोर्स इट इज द नीड ऑफ द आवर. बहुत सारे चेंजेस आए हैं कॉर्पस में. आई थिंक दिस इज द एंड ऑफ द कंटेनर. Anybody who is interested in getting my details, scan कर सकते हैं.